This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices steadied on Tuesday, regaining ground after early losses, as traders weighed the impact of Western sanctions on Russian oil flows against an expected supply surplus next year. Brent crude was up 12 cents, or 0.2%, at $64.32 a barrel by 13:30 GMT. U.S. West Texas Intermediate crude gained 14 cents, or 0.2%, to $60.05. Traders weighed the impact of a growing global surplus against U.S. sanctions that are disrupting Russian crude flows, said MUFG analyst Soo-Jin Kim. Both benchmarks were trading about 1% down earlier in the session.
China's exports of refined oil products in October rose 14% year-on-year and fell 12.1% from September, customs data showed on Tuesday. The refined oil exports, which include diesel, gasoline, aviation fuel and marine fuel, totaled 4.52 million metric tons for the month, slowing from 5.14 million tons in September. In the first 10 months, China exported 47.53 million tons of refined oil, down 3.3% year-on-year. Diesel exports rose 55.7% year-on-year to 740,000 tons. In the first 10 months of the year, diesel exports were 22.7% lower at 5.82 million tons.
Moving on to the top news in the energy sector.
Global refining margins have hit multi-year highs in November due to sanctions on Russia, refinery outages and maintenance, according to LSEG data and analysts, and some see little respite without more plants being built in the Western world. The strength in margins contrasts with crude oil markets coming under pressure from an expected oversupply, and has defied expectations earlier this year that the rally could prove to be a short-term blip due to the impact of tariffs. In the US, the 3-2-1 crack spread, a key measure of overall profitability, hovered at $32.13 a barrel on November 18, close to an earlier high which was the highest since March 2024.
U.S. natural gas futures fell for a third straight session on Tuesday to their lowest in more than a week, pressured by forecasts for milder late November weather that are expected to curb heating demand. Front-month gas futures for December delivery on the New York Mercantile Exchange fell 9.3 cents, or 2%, at $4.27 per million British thermal units at 10:13 a.m. Eastern Standard Time, 15:13 GMT. The idea that we lost a lot of that deep cold coming in towards the second half of November has certainly taken a lot of the bid interest away from the market, said Robert D. Dona, president of Energy Ventures Analysis. Next, we have the top news in metal markets. The European Commission plans to restrict EU exports of scrap aluminium, to stop the metal flooding out of the bloc and leaving its industry short of an input required to decarbonize, EU Trade Chief Maros Sefcovic said on Tuesday. EU exports of aluminium scrap hit a record 1.26 million metric tons in 2024, industry group European Aluminium says, up about 50% from 5 years ago, with most heading to Asia. The EU industry says the situation has worsened since, due to U.S. President Donald Trump's import tariffs of 50% for aluminium but only 15% for scrap.
Copper slid for a third straight session on Tuesday to its lowest in almost 2 weeks, as industrial metals were hit in a broad sell-off of risky assets sparked by fears of an overvalued tech sector and fading hopes of a Federal Reserve rate cut. Benchmark 3-month copper on the London Metal Exchange was down 0.8% at $10,690 per metric ton in official open outcry trading. The metal, expected to benefit from the artificial intelligence boom, earlier fell as much as 1.1% to $10,660.50, its lowest since November 5. Copper is now down around 4.5% from the all-time peak of $11,200 struck on October 29 on concerns over mine supply. But one trader attributed its recent decline to a correction rather than to the AI bubble bursting.
We will now look at the top news in the agricultural sector.
Indian farmers are set to expand wheat acreage by about 5% to a record high, aided by higher returns and October's untimely rains, which improved soil moisture and encouraged a shift from rain-fed crops to the cereal, industry officials told Reuters. The higher planting is expected to help the world's second-largest wheat producer boost output, ease local prices, and potentially enable New Delhi to permit limited exports of wheat flour. Given the higher soil moisture at this time due to increased rainfall, wheat sowing and production are expected to surpass all previous record highs, Nitin Gupta, senior vice president at Agri India, an agricultural commodity trader, told Reuters.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.